What's up, guys? Welcome back to Create Capital. It's Dan here. Today we're going to be talking about ETFs. And if you're anything like me, you've been looking at investing more in ETFs lately, trying to diversify your portfolio, maybe try to track those S&P 500 gains, or maybe something else. And I wanted to take a look at what are the best platforms in Canada that we can use to invest in ETFs so that you can ultimately get the best return and have the lowest fees and everything like that. So I did some research to figure out what companies are out there, what are the best ones to go with, and what are the kind of key things that we want to consider for each one of these platforms. And I've narrowed it down to the top 4 for you today, and we're going to look at that. So before we get into each platform, I want to take a quick look at ETFs in general and what they are and why you would want to invest in them in the first place. So ETF stands for Exchange Traded Fund. And all that means is it's a type of security and it tracks either an index or a sector or a commodity or other type of asset. You can think of it as like a group of stocks all bundled into one big basket where essentially you get the overall performance, positive or negative, of that group of stocks. So it gives you the ability to diversify your portfolio a bit, but still have that ability to make the gains that you really want to. An example of a really popular ETF right now is SPY. It's an S&P 500 tracking ETF. So we talked before about index tracking ETFs. This would be one of those. Some quick key facts about ETFs. They're relatively passively managed. So because they would track like S&P 500, for instance, or maybe there's like an EV, electric vehicles ETF, there's a certain set number of stocks that are in that group. So it holds that set group of companies and all in the right proportions, and it's as easy as that. The one reason why you might want to consider an ETF is because of its low fees. ETFs have typically a lot lower fees than, say, mutual funds would. And that's because they have less buying and selling happening and less commissions and less tax and all these things that typically mutual funds get burdened with. So it's a really great alternative to mutual funds, having those low expenses, and you still get the great performance. So now I'm going to tell you guys my top 4 ETF platforms in Canada as promised. So let's get into it. At number 4, now RBC Direct Investing is someone that I've banked with in the past, and I find them to be great, especially for individual stocks. So I took a look at them and a bunch of other banks in Canada, and I find them all to be very similar from an ETF perspective. So I rated them an overall score of 6 out of 10. Their interface score is pretty good. I mean, if you're familiar with it, it's gets the job done. It's a 6 out of 10. To buy an ETF, it's $9.95 per purchase. So if you're looking to buy like every day, a little bit of a trickle into your account, probably not the best one to go with. But if you're buying like once a year or something, you take a big chunk and you throw it in ETFs, it's probably fine. Same thing on the sell side. So if you're going to sell your ETFs, you're going to get hit with a $10 charge too. So you want to consider how many times you're actually selling ETFs and factor that into your decision. This is a really big one. So having separate Canadian dollar and US dollar money accounts in the account. So essentially here you want this because the less you can transfer money between Canadian and US dollars, the more you will save, because every time you move money between currencies, you're going to get hit with the transaction fee or some kind of like percent commission that the bank takes on top of whatever the foreign exchange rate is. So it's not ideal. And it's typically like 1.5%, 2% or so, but that adds up. An interesting little loophole to this is something called Norbert's Gambit. I'm not going to get into the details because it can get pretty complicated, but there are ways to avoid getting hit with that 1.5% to 2% currency conversion charge. And Norbert's Gambit is a well-known type of way. Basically what you do is you buy a stock or some other type of asset that has both a US and a Canadian version of it. And once you buy, let's just say you wanted to convert from Canadian to US, you'd buy the Canadian version, and then you would journal your shares over from Canadian to US, and then you sell it in US, and then you get US funds, and you don't get hit with that currency conversion because instead of changing money to money, you've changed a stock to a stock. And so you can avoid it that way. It's pretty cool. If you want to learn more about it, I'll put a link down in the description below. So click on that and you can learn all you want. Fill your boots. So the next thing we want to look at is your account minimums. So i.e., do you need to have a certain amount of money always sitting in your account in order to avoid having fees every month or every quarter or annually? RBC does have this, so if you have less than $15,000 in your account, then you'll get hit with a $15, they call it a maintenance fee or an account maintenance fee. So that kind of sucks. But if you have that $15,000, then the cost is zero, so it doesn't really matter. So take that into account. And lastly, I always like to know how the bank or how the company makes money so that I can try to figure out, does that jive with what I think is fair? So here they make money on their buy and sell fees, which I've obviously mentioned, the $10 each way, and they make money on that 1.5% to 2% spread on the foreign exchange, like I mentioned, and also the maintenance fees, like we talked about. So pretty good choice, but I think there's better. So next we have Wealthsimple. Wealthsimple is a really great platform. It's like a investing brokerage rather than a bank, and I would rate them an overall score of 7. Their interface is really easy to use, maybe one of the best. I gave it an 8. Here's the really cool thing. It's free to buy ETFs. You can just buy 20 times a day and you're never going to get hit with a charge, which is pretty awesome. On the sell side, it's also free. So you got to be thinking like, how does Wealthsimple even make money if everything is free for their customers? And here it is. They do not separate their Canadian and US dollar funds. So if you have an account with Wealthsimple, you have one bucket for all the money. So let's just say you live in Canada, you're going to buy an ETF that's based in the US, like VOO or SPY. What you do is you purchase it, it converts your Canadian dollars into US dollars to buy that. You get hit with the exchange rate and the 1.5% to 2% spread on the currency that the brokerage takes. And here's the real trick. When you sell that ETF eventually, it goes back into Canadian dollars automatically. So you get the currency conversion hit on both ends, whether you like it or not. I find for me, typically when I have a US type investment, I live in Canada, so when I have a US type investment, I will sell it. It'll stay in US funds, for instance, like in RBC Direct Investing, it'll stay in US funds. That way I don't have to reconvert money back and forth and get hit with the exchange rate all the time. You can't do that with Wealthsimple. And that is the biggest drawback of this entire platform, this entire brokerage. And for me, it's a deal breaker. So it's not one that I would recommend just because of that one thing. You can't do Norbert's Gambit, obviously, with Wealthsimple either. There is an account minimum of $1,000, and they make money, obviously, like I said, by doubling down on the Forex charges. I have heard rumors that Wealthsimple is working on having separate Canadian US dollar accounts, which would obviously help, and that may be a great platform at that point. But for now, it's not one that I would highly recommend. Next up, we have National Bank Direct Brokerage. Now this one, kind of like RBC Direct Investing, is born out of a bank, but it's got some really, really key notable things that I wanted to highlight. I gave them an overall score of 8, and with an interface score of 6. Say they're pretty similar to RBC Direct Investing from an interface perspective. Not always the most simple to use, but it's pretty good. Your fee to buy ETFs, 0. Fee to sell ETFs, 0. Really good. They have separate Canadian and US dollar accounts, unlike Wealthsimple, so you're able to segregate and you don't get hit with the foreign exchange charges on both sides. You can do Norbert's Gambit on this platform, so you can avoid those foreign exchange fees altogether pretty much. There's always a little charge even when you do Norbert's Gambit, but it's typically less. And then there is no account minimum, $0. They make money just from that foreign exchange rate charge on the buy side, or anytime you really convert money back and forth. The reason why I gave them a rank of 2 and not 1 is because they're a little bit more difficult to just get an account and start things up, because they're kind of attached to a bank, so to speak. It just takes a little bit more effort to set up your account and get going with them. But really great platform. I don't use it myself, but I definitely considered it highly. Now, last but not least, you've been waiting for it. Number 1, you might have guessed it. If you did, let me know down in the comments below. Drum roll. Brrr. Questrade is number 1. Okay, so Questrade, I gave them an overall score of 9 with interface score of 7. They have a really great platform, I would say. Their interface is really easy to use. It's pretty clean. Not quite as clean as Wealthsimple, but you get a little bit extra functionality, I find, with Questrade as well. So that just makes it a little more complicated, but still really easy to use. From a fee perspective, it's free to buy, like National Bank and like Wealthsimple. It does cost money to sell. So this is the one downside of this, and this is why they didn't get a 10. There's 2 different ways that Questrade works. You can do a fixed fee of $4.95 per sell, or a per share fee. So, 1 cent per share up to $6.95 max. And to me, I felt like this wasn't too big of a deal because it's not really common for me to even sell ETFs. And if I do, I'll probably do big chunk every, long time, every year or 2. So it really shouldn't affect the decision making too much. For me, maybe you're different. Maybe you're buying and selling all the time, in which case you might want to avoid this one. But for me, it was really good. It does have the separate Canadian US dollar accounts, which is great. And it is possible to do Norbert's Gambit, which is even more great. You do need that $1,000 account minimum, so you load in your 1,000 and then you're good to go to trade for free. And they make money, like I mentioned, through selling fees, through small forex charge of the 1.5% to 2%, but again, you can avoid that with Norbert's Gambit, mostly. And so that's it. Let me know what platform you use, if you think some are better than others, or if you think that any of the analysis that I've done doesn't make any sense for some reason. So let me know. I look forward to that. And if you haven't already, please consider subscribing. I see a lot of my viewers are not already subscribers, and I want to provide as much value to you as I can. So if you can keep coming back, watching all the videos, that's awesome. I really appreciate it, and I appreciate you. So thanks again, and we'll see you in the next one.